Imagine if every dollar you invested in real estate worked as a seed, growing into a mighty money tree. What if I told you there's a way to measure exactly how fast and strong your tree can grow? That's where the magic of cash on cash return comes in. Welcome back to Think Freedom, Finance First, Freedom Follows. Today, we're diving deep into cash on cash return, a metric that shows the real cash flow from your real estate investments. Whether you're a newbie or a pro in the investment world, understanding this concept is crucial. It's not just about investing, it's about investing wisely to ensure your financial growth. Stay tuned as we break down everything you need to know, making it simple and actionable. Don't forget to hit subscribe and join us on this journey to financial freedom. Finance First, Freedom Follows. Section 1. What is cash on cash return? All right, let's dive into the heart of today's topic, cash on cash return. Imagine this. You invest in a piece of real estate. At the end of the year, you look at how much cash that investment has put back in your pocket. That's what cash on cash return is all about. It's your real estate investment's yearly paycheck compared to the initial cash you put down. Why does it matter? Well, it gives you a clear snapshot of your investment's performance. We're talking about the actual cash flow, not just numbers on paper. This metric is crucial because it helps you see the efficiency of your investment. Higher cash on cash returns mean more bang for your buck. But how do we calculate it? You take your annual income from the property, subtract your expenses, and then see how that final number stacks up against your initial investment. It's like measuring how quickly your investment can pay itself off and start earning you pure profit. Think of it as your investment's pulse. A strong, healthy pulse means your investment's doing well, pumping good returns back to you. A weak pulse? It might be time to reassess. Investing smart means looking for opportunities with the best returns on the cash you directly invest. Cash on cash return helps you filter out the noise and focus on investments that truly work for you. Remember, a savvy investor doesn't just throw money around, they invest where they see real, tangible returns. And that's what cash on cash return is all about. Finding those golden opportunities that increase your financial freedom year after year. Section 2. Cash on cash return formula. All right, let's dive into the nuts and bolts of cash on cash return. This metric is like your investment's heartbeat, telling you how healthy your cash flow is compared to what you've put in. First up, the formula. Cash on cash return is calculated by taking your property's annual pre-tax cash flow and dividing it by your total cash invested. Simple, right? But here's where the magic happens. To figure out your annual cash flow, you need to understand net operating income, or NOI. This is all the money your property makes in a year, minus the operating expenses. We're talking rent income minus costs like maintenance and taxes, but not your mortgage. Then, the total cash invested includes your down payment, all closing costs, renovation expenses, and any other initial costs to get the property up and running. It's your real investment amount, the total cash you've put in before the property starts generating income. So, why bother with all this math? Because cash on cash return gives you a clear cash-based picture of your investment's performance. High cash on cash return? That's a strong investment. Low cash on cash return? Might need to rethink your strategy. Imagine this: you buy a property. You tally up your down payment, closing costs, renovation expenses. That's your total cash in. Then you collect rent, pay the bills, and what's left is your NOI. It's this dance between what you've invested and what you earn that frames your cash on cash return. But remember, real estate's not just about one metric. While cash on cash return is great for understanding cash flow, combining it with others like cap rate gives you the full investment picture. So keep cash on cash return in your tool belt. It'll help you spot those goldmine properties and avoid the money pits. Section 3. Cash on cash return examples. All right, let's make cash on cash return crystal clear with some real-world scenarios. Imagine diving into the world of real estate investment. You've got your eye on a property and you're ready to see what kind of returns you can expect. Remember, it's all about how much cash flow you pocket compared to your initial cash investment. Example 1. The starter home investment. Picture this. You buy a cozy starter home for $200,000. You put 20% down with 5% closing cost. That's $50,000 out of your pocket. Let's say your annual cash flow after expenses, but before mortgage, is $6,000. Simple math here. Your cash on cash return is the $6,000 divided by your $50,000 investment. That's a 12% return. Pretty impressive, right? Example 2. The fixer-upper. Next up, a fixer-upper. You purchase this diamond in the rough for $150,000. After your down payment of $30,000, you spend an additional $20,000 on renovations. Total cash in, $50,000. With smart upgrades, you increase the rental income, netting $10,000 annually after expenses. Your cash on cash return? A solid 20%. This shows how value add can boost your returns. Example 3. Multifamily property. Last scenario, a multifamily property. You go big and buy it for $500,000 with a down payment of $100,000. It's a hot spot, and after all is said and done, you're bringing in $25,000 a year. Divide that $25,000 by your $100,000 initial investment, and you're looking at a 25% cash on cash return. It's clear how scaling up can amplify your cash flow. These examples showcase the power of cash on cash return in evaluating investment opportunities. Whether you're starting small or going big, understanding this metric can guide you to smarter, more profitable investments. Understanding cash on cash return is essential for any real estate investor aiming to maximize their investments. This metric not only offers insight into the actual cash flow from your investments, but also helps gauge the efficiency of your cash invested against the returns it generates. In conclusion, mastering how to calculate cash on cash return empowers investors to make informed decisions, ensuring their investments work as hard as they do. It's a fundamental step towards building a solid investment portfolio that stands the test of time and fluctuating market conditions. By focusing on investments with favorable cash on cash returns, you're strategically positioning yourself for financial growth and stability. If you're keen on navigating the complex landscape of real estate investment with confidence, remember to dive deep into understanding all its facets, starting with cash on cash return. And don't stop here. Continue educating yourself on financial metrics that matter. For more insights and practical advice on real estate investing, subscribe to our channel. Your journey to financial freedom through savvy investing starts with knowledge and action. Keep working towards your financial goals and be kind to the others. Stay tuned for our next video, and thank you for choosing Think Freedom as your guide to financial independence.